Hello traders, you're welcome to this video and I welcome you back to the Forex Geek channel. So in this particular video, we're going to be talking about advanced decline ratio, okay? And the focus of this video is on breaking down this essential market breadth indicator that measures overall market momentum and sentiment, all right? Now, the advanced decline ratio offers a clear view of market health, right? It offers a clear view of market health by comparing the number of stocks moving higher to those moving lower. All right. So as you can see that the advanced decline ratio, it actually shows the ratio of advancing issues to declining issues, and it is calculated by dividing the number of advancing issues by the number of declining issues. Okay. A moving average of the advanced decline ratio is often used as an overbought oversold indicator, and the higher the value, the more excessive the rally and the more likely a correction. Likewise, low readings imply an oversold market and suggest a technical rally. So as we can see, we have different charts right here, and you can see the advanced decline ratio indicator. You can see that it has an indicator window of its own, showing you information about market breadth. All right. So understanding the advanced decline ratio starts with its basic calculation. So simply put, the ratio is determined by dividing the number of advancing stocks by the number of declining stocks. It's as easy as that. Okay. For instance, if 1,200 stocks are advancing while 800 stocks are declining, the ratio comes out to 1.5, right? How do you get 1.5? 1,200 divided by 800, right? So if we have, let's just be doing the calculation together. We have 1,200 advancing stocks and we have 800 declining stocks. So how you get the advanced decline ratio is simply dividing the advancing stocks by the declining stocks. That is 1,200 divided by 800, and we have 1.5. Okay, so the ratio comes out to 1.5. All right. Now, a higher ratio suggests that upward momentum is widespread, whereas a lower ratio might signal that the market is experiencing a loss of strength. So one of the key advantages of using the advanced decline ratio is that it provides insight into the overall market performance beyond what major indices can show. Okay, so while indices like the S&P, like the one I opened right here, the S&P 500 may be influenced by a few large companies, the advanced decline ratio captures the movement of the entire market. All right, now this comprehensive approach is invaluable for identifying broad trends and potential market reversals before they become evident through price action alone. Right, now moving deeper into the topic, consider how the advanced decline ratio can help confirm market trends. Okay, a consistently high ratio, right? A consistently high ratio indicates that a bullish trend is supported, right? It's supported by a broad base of advancing stocks. Because for the fact that our calculation involves, the advanced stocks coming first divided by the declining stocks. So if you have a higher ratio, it simply means that the number of advanced stocks, right, or advancing stocks rather, are way higher compared to the declining stocks, right? It's just simple calculation. So it's important to note that the advanced decline ratio works best when integrated with other technical indicators. You can actually decide to pair it with, moving averages or volume analysis, right? Just to provide a more complete picture of market dynamics. Okay. Now, this multi-indicator approach not only enhances your market analysis, but also leads you to more robust trading decisions. All right. Now, by combining different analytical methods, you create a comprehensive strategy that is adaptable to various market conditions. Okay, so now let's just quickly discuss some practical steps for incorporating the advanced decline ratio into your daily trading routine. All right, You can begin by routinely monitoring the ratio on a daily chart, right? You can begin by, monitoring the ratio on a daily chart, observe how many stocks are advancing versus those declining, and take note of any patterns that emerge over time. Okay, now historical analysis of the ratio can provide valuable context and help you understand how the market behaves during different phases. Okay, now this insight enables you to identify periods of strength or potential weakness, allowing for timely adjustments to your trading plan. Okay, for newcomers to this indicator, right? Practice is essential. Okay, practice is actually very important. So you might want to spend time reviewing historical data and observing how the advanced decline ratio reacted during previous market cycles. Okay, this hands-on approach will sharpen your ability to interpret current market signals. All right, and as experience builds, right, as experience builds, you will be able to quickly assess whether the market's momentum is robust or if there are some, subtle hints, right, some subtle hints of a potential reversal. Okay, so such insights are vital for a well-rounded trading strategy. Okay, and integrating the advanced decline ratio into your overall market analysis adds another layer of insight. So whether you are just starting out or you are a seasoned trader, understanding market breadth is crucial. All right. If you are a fan of trading stock indices, you can actually find the advanced decline ratio to be really beneficial, right? Considering the bigger picture, you might want to add the advanced decline ratio into your market analysis. Okay, it actually enriches your technical analysis, right? Offering a broader perspective that can confirm or challenge trends seen on your price charts. All right. Now, another thing is the more indicators you use, the better equipped you are to navigate the complexities of the market. So that is it, right? Now, before wrapping up, here are the key points to remember. Okay, the advanced decline ratio, right? The advanced decline ratio measures the balance between advancing and declining stocks, offering a clear view of market health, overall market health, actually, and it serves as an early indicator of potential trend shifts. And when combined with other technical tools, it becomes a powerful element of your trading strategy. Okay, so if this video has helped, provide valuable insights for you into the advanced decline ratio and its role in market analysis, please click the like button and subscribe for more expert insights into Forex trading, market indicators, and effective trading strategies. All right, your support is essential for building a community of informed traders. In the meantime, thank you for watching. I hope to see you in the next video. Stay informed, stay strategic, and keep enhancing your trading skills.